the locations of Europe's great cities were generally selected by Roman engineers, Paris, London. Infrastructure equals value. But it becomes a problem when people won't pay for it. Now, when there's growth, development, changing prices, you can see, and it's in virtually every study ever done, that there's both losers and winners. Some of the losers when there's tremendous growth are the existing residents whose quality of life declines with congestion. Some of the winners, landowners in particular. Now, in order to offset the loss to the existing residents, obviously, one aspect of that is, and what is needed is always new infrastructure. Now, in terms of Vancouver's real estate prices, they're very high by any measure, but it's the detached market which has detached itself from any economic context. And here I'm just borrowing one quick chart, and you can see the trend line. It'd be about 30% over what, or 25% over what it rationally should be. So it must be something political or social. It's certainly not got anything to do with economics. Now, value in infrastructure, new infrastructure adds little value to existing buildings, but it adds massive value to future development sites and growth. I've done studies of, Highway 1, Gateway, and so on, new bridges, and new transit, and all has a massive positive impact, but only if development is permitted. And I'm going to very quickly use the example of transit. And these are studies. One of the things that's come forward is doing assessed value of new and existing real estate surrounding 400-meter radius surrounding transit stations and some control intersections that don't have transit stations. You can see how Brentwood Station, for example, twice the Burnaby average. Even more outstanding in terms of just new construction in the last 10 years. And you can see the old corners like Hastings and Willingdon lagging far behind. And then we see this deep suburbs. Lansdowne, phenomenal. An excellent job being done by both Burnaby and Richmond to capitalize on the value of the transit services. And here it is, just new. Up to 60%, tremendous. And then we have something which is really wanted to show is the whole point of this quick analysis. In Vancouver, there's a little difference between transit-served corners and regular intersection. In fact, Granville and Broadway comes out stronger than Broadway and Cambie or Broadway and Commercial in terms of existing and in terms of new, which is really quite surprising. And it's clear that the City of Vancouver has not realized transit's many benefits. Now, one of the things about growth and infrastructure is that in order to, sometimes, as bridges are built, we're noticing that they're all becoming toll roads. Now, it's clear that the user should pay. That's an obvious economic principle. But what happens with new growth, sometimes it's very, very messy. And often new growth doesn't pay its fair share of its burden on infrastructure. There's got to be different things done to do that. This is an interesting chart which just shows median tax filer income against house prices. And normally, in the old days, you'd say there'd be some correlation between wealth and house prices. But you can see here, by far, the lowest income community in Metro Vancouver is Richmond, yet it clocks in at the third highest average to house price. Nothing can really explain this, and we can say that there is no relation anymore between income and house prices. So very briefly, in terms of debt pays for infrastructure, it's interesting to note that in the 60s, guys like Nelson Rockefeller would have paid a 90% marginal tax rate and not really complained that much. Now, people have trouble with 30%. Anyway, income tax as a source of government revenues is declining. And one day, if there aren't other sources of wealth, we're going to see higher levels of government reach deep into the one source of wealth that they can see, real estate, and ask for a lot more than the traditional role of municipalities. Now, I want to have just a few moments on infrastructure. It comes in several types: hard infrastructure, roads, sewers; soft infrastructure, hospitals, schools. Third, we can liberally call it environmental. It's just simply clean water and a pleasant place to live. Let's stack Vancouver up against a number of big cities. We come out very, very strongly. What it's basically saying is that Vancouver has a tremendous surplus of all forms of real estate, of infrastructure. Therefore, its value is warranted. Generally speaking, it's in a competitive structure. People come from places that don't have infrastructure to places that do. The issue, I guess, would be to make some of the people who come to places like Vancouver ensure that they pay for some of that infrastructure, and that we don't head down that list from the top to anything a little lower. Now, China is the most source of demand for high-end homes. It's interesting to note that they have a bit of a bubble over there. 60 million homes remain vacant, just speculative. Hundreds of millions of square feet of office and industrial, all vacant, all just speculative. But I wouldn't say that China is going to end in a bubble. It's just they've got too much control over the economy, and in terms of a forecast, I'd say even as if we decline, in quality of life, and we don't add a couple of new UBCs and new VGHs as we do need, and as are warranted, we still come out very, very strong. So given permanently low interest rates, my verdict is, believe it or not, there is no bubble in Vancouver. And before I end, I do a large amount of very large-scale industrial work. And they did want me to make one quick mention. Here's the industrial lands in our region. And here's the latest inventory of built and vacant lands. And an area, the third column, is vacant suitable for logistics, that's port-related. And it's very clear that within 7 years, we are going to see a tremendous shortage of industrial land and real problems, and we'll see speculative price escalations shortly after. Thank you very much.
It's great to be back here again, and I keep thinking that most of the people in your room probably think, what is that guy doing up there again? Can't they find somebody fresh? But it's great to be here. I'm going to be really brief. I've got 8 minutes, and I'm going to tell you what a real estate bubble is and explain to you why we're not having one here and will not have one here for the foreseeable future. And David I've known for 3 decades now, and David used to come out when I was a student at UBC, and he was a bigwig with BC Place, and he used to come and tell us with this chart of False Creek what False Creek was going to look like in the year 2010, and he showed us where they were going to have this World's Fair, where all these sawmills were, and truck plants and industrial plants, and this crappy old False Creek. And we thought, and then he showed us that 20,000 people were going to live there one day. There was going to be shopping, and there was going to be a stadium and an ice rink, and we thought, this guy is an absolute flake. Well, he didn't turn out to be much of a flake. He was right about everything, and he was right in 2007 when he wasn't a very popular guy, when he talked about things going the wrong way, and they sure did. And I wasn't very happy with you either, but I took cover real quick, and we were lucky we did. So when I was called to ask to participate in this, I said, bubble trouble. Look, why bubble trouble? Why are you titling the lunch Bubble Trouble? And we were told that that was going to be the name, and that was it. So, however, the word bubble stirs up a lot of interest and a lot of controversy, and evidently sells a lot of tickets to lunches. So well done, Wendy. So I've got exactly 8 minutes to dispel the rumor, the myth, the misunderstanding about what a bubble is. So first, let me describe to you. You probably want to get your pens and paper out now for this. Let me tell you what a real estate bubble is, so you can explain it to your friends. For those of you who are not familiar with it. So very, very simply, a real estate bubble is formed when there's a period of rapid price inflation during an undersupplied market condition, a time when demand is outstripping supply. That's about as basic as you can make it. So as prices are rising, we as good developers, David and I, and sellers, we bring more product onto the market and increase supply. And eventually demand keeps up with supply and becomes balanced, and then supply begins to outstrip demand. This can be followed by rapid price deflation, which is commonly called the bursting of the real estate bubble. So that's what a real estate bubble is, okay? No bubble. So I'm going to back this up with facts. So real estate bubble is a classic demand and supply situation, a simple case where supply exceeds demand after a period of very low supply. I assure you this is not the case here in our local market, and I'll quickly explain why. So we simply have too many people coming to this great province and region of ours from all parts of the country and all parts of the world. They love Vancouver, and they all need somewhere to live when they get here. So let's talk about some numbers, some facts. So as always, when I'm addressing a very, very suspicious crowd like this, I back it up, and not just with my opinions, but I called Robin Adamach at CMHC, who's got about 80 people working for her that are all just doing research all day on our local market. So just very quickly, Vancouver housing starts, Vancouver region for 2011, CMHC is predicting that we're going to build 16,300 units, with 13,000 of those will be multifamily units. And for BC, about 26,000, of which about 17,000 will be multifamily units. So our 10-year average is about 30,000 starts. So we're still very much under our 10-year average. So for next year, CMHC is predicting that starts will increase to 17,500 in our region. And when I say our region, I mean the Water, West Vancouver, Richmond, the border, all the way out to the Langley-Abbotsford border. So that's what I'm talking about when I say region. So for next year, we're talking about 17,000 starts, of which about 14,000 of those will be multifamily housing starts. So drivers, migration, net migration for 2011 this year, according to CMHC, will be 52,700 people to the province. 52,700 people, of which 42 to 45,000 people will reside here in the Vancouver area. So for next year, the forecast is 61,000, of which about 46,000 people are going to reside in the Vancouver area. So this year we had a little bit of a slip, so migration was down a bit. So according to CMHC, this amount of people moving into our province will create a static demographic requirement for between 17,500 and 21,000 units of new housing a year. So 17,500 units and 21,000 a year just to deal with the amount of net migration we've come into the province. So currently, how am I doing for time, David? Okay. Currently, there's over 300,000 immigrants pre-approved to come to BC over the next 5 years under the Canadian Investor Program and the BC provincial program. So that's about 60,000 people that are approved now in the system to come to BC under those programs, of which about 45 to 50,000 people, again, will settle in the Vancouver area. So is it July 1st, this summer, 2011, the federal government, in their infinite wisdom, decided to change that program. And I thought, uh-oh, here we go. This is the linchpin. This is the end. So currently, under the Entrepreneurial Immigration Program, an investor immigrant applicant has to have a net worth of 1.2. That was increased to 1.6 million. They also have to have place an investment bond of 400,000. That was increased to 800,000. Now that investment bond cannot be used for buying a home. It has to be used for buying a business that will create employment in Canada. And if that bond is not invested in 5 years, it is forfeited to the government, and it has to be a government-approved business. So those rules all changed on January 1st. We thought it was going to be, hell was going to start on fire again, and there was absolutely no fallout. No fallout at all. So there's going to be huge demand here. So just simply looking at the immigration numbers, we're going to be undersupplied here over the next 2 to 3 years. So demand for this year of 17,000 to 21,000 units, with only 15,000 units being built, we're still in an undersupply situation. For next year, and we're not even taking into account organic growth or those folks, the domestic demand, kids moving out of the house and starting a household of their own. So what could slow it down? Well, prices could slow it down and interest rates could slow it down. So let me deal with interest rates. Interest rates are not going to change next year. The prime rate is not going to change. There's too much unrest in the world's economy, and I just don't see the Bank of Canada doing anything next year, and neither does CMHC. CMHC is predicting that if mortgage rates rise next year, they'll only rise by less than half a percentage point. So interest rates are not going to hurt our market next year. So prices. This year to date, we've seen prices move up 19% over last year, 19% overall in this market. So average home prices now in the Vancouver region, $750,000, and CMHC is forecasting a 4% increase for next year. Respectfully, I think they're light. I'm calling for 7%. When I went to business school many years ago, we talked of a balanced market being a market where we had 6 months supply. And I mean supply ready to move into tomorrow, get a key tomorrow and move into it. CMHC calls a balanced market in equilibrium now. They define it as 8 months. So let's talk about supply for just a minute. So according to CMHC, we currently have 1,459, that's 1,459 condos on the market. I'm talking about condos on the market that are ready to move into and available. They're not sold. So that's roughly about 10% of the supply. So about a 1.5 to 2 month supply is all we have on the market. So let's talk about what's coming up. So currently we have about 10,000 units under construction, of which about half, according to CMHC, are pre-sold. So approximately 5,000 unsold units that will be coming onto the market over the next 12 to 24 months. It's coming out a lot slower because we as builders, like David did, we all stopped. So that product is coming through the pipe at a later date. So completions of that inventory is going to be slow because we all stopped. So there'll be about 4,000 units, unsold units, coming onto the market. That's what's available now, coming onto the market, and that will be absorbed over the next 12 to 24 months. So talking about the resale market, what a year it's been for the resale market. I mean, the stories about the West Side are unbelievable. And now West Vancouver. And since that tsunami hit Japan, these Asian folks have found the high ground over there and have changed that market over there. And it is an unbelievable market in West Van right now. Anything over $2 million is selling to Asians. So unbelievable activity, and price increases will be fueled by Asian immigrants. I believe, as many regional economists believe, that our resale market next year will be heading to a more balanced situation. Just about finished. Price growth was slow, and we'll see the supply of listings go down. And I don't foresee another 19% year, but I do see another year of price increases. Hopefully things will normalize. So hopefully you're informed as to what a housing bubble is, and next time you're talking about it at a cocktail party, and it will come up, you can tell everybody you know what a housing bubble is. So no bubble conditions in this market, and I don't see it in the foreseeable future, so take that to the bank. So buy now and buy often. Thanks for having me again.
In my preparation for today, Christina, our illustrious event coordinator here at the Board of Trade, was quick to point out, I need a little residential, I need a little commercial, I want you to go into the detail, bubble, impacts, all of that. Well, I said, that was okay. And then she said, by the way, you need to do it all in 8 minutes. Wow, that's a serious load. So I've rewritten this several times. I've taken out all the extraneous stats. I've done it high level, so hopefully that will foster some good Q&A for us. Let's start with a picture. It was February 2009. We're all gathered here at a Vancouver Board of Trade event very much like this one, and we're right in the midst of the global recession. For the Greater Vancouver housing market, the recession resulted in home sales that were dipping to 25-year lows. In all, home prices declined about 15%. But in the nearly 3 years since, prices in the region have regained and well exceeded those losses. However, with mounting uncertainty in the global economy today, close attention is again being paid to the health of our market. At the beginning of this month, the Greater Vancouver housing market officially moved from a balanced market to a buyer's market. Said another way, supply is outpacing demand. To understand this current market cycle, we need to understand the activity that's been happening in the last 12 months. By the end of 2010, we saw a wave of demand growing for detached homes in the region's largest areas. We asked ourselves 2 questions. 1, what impact did the Olympics have on our housing market? And 2, are we in a housing bubble? I think the answer to both of these is linked. In my opinion, the hosting of the Olympic Games did not fundamentally change anything about our housing market. It reinforced and magnified what we already had, which includes, first, unmatched physical beauty, great schools, low crime, diverse housing stock, and a close connection with the burgeoning economies in Asia. The best way to stimulate activity in your real estate market is to have a strong economy. like Ward's mentioned. Perhaps the second best way is to be close to a strong economy. The wealth creation that has occurred in China and other parts of Asia over the last decade has had a considerable impact on our housing market. Given our proximity and direct ties to Asia within our communities, Metro Vancouver has become an attractive destination for people across the region to work and to live. In the beginning of 2011, our members began telling us increasingly about the number of wealthy buyers, primarily from mainland China, purchasing high-end homes in 3 areas: Richmond, the District of West Vancouver, and the west side of Vancouver. In the same quarter this year, our MLS statistics began to support these anecdotes. Home prices in these 3 areas started to rise faster than in the rest of the regions. For example, detached homes in Richmond have risen nearly $200,000 in the last 12 months and now cost more than $1 million. West Vancouver homes have increased $275,000 and now cost $1.7 million. Detached homes on the west side have risen, you guessed it, $400,000 since October 2010, and the typical home now costs more than $2 million. Demand for high-end properties has helped drive our market for most of the year. Between January and September, 953 properties sold on MLS for $2.5 million. That's almost as many as the 3 previous years combined when looking at the same 9-month period. Of these high-end sales, 98% occurred in those markets. This activity has created significant international interest. In the last year, our board and our illustrious president, Rosario Sedicassi, has been interviewed by the Wall Street Journal, Bloomberg News, the BBC, and several news outlets from China and other parts of Asia, all wanting to know whether foreign investment is behind the spike in demand. Our MLS does not track where buyers come from, nor does it track whether a buyer plans to live in the property they've purchased. In the absence of this data, we've looked to other sources of information to understand these trends. Each month, our board conducts an internal poll of our members. The results consistently tell us that between 10 and 12% of all home buyers in Greater Vancouver are moving from outside of Canada. About 3% are characterized as foreign investors. This latter figure is in line with other research recently released about our market. And this is the main point. People who are buying residential properties are living here. People who are buying residential properties are calling Vancouver home. Since the spring, demand in our marketplace has declined. Home sale activity has dipped below historic norms, while normal listing activity has steadily increased each month this year. These trends have not, however, resulted in much movement in the home prices. So what lies ahead for our residential market? Most economists are calling for either flat or moderate growth next year, but we'll wait to see how the next chapter reads. Moving to commercial. If we look at the new building permits for Metro Vancouver area, total building permits are up 8% year to date. Let's break this down. Residential building permits, 2% higher as compared to last year. Commercial permits, 47% higher. Industrial, 26% higher. But institutional government permits are down 22%. Construction employment in Metro Vancouver rose 24% in September 2011 compared to September 2010. Consumer spending remains constant at about $2 billion to $2.5 billion per month, and that's been stable over the past 2 years. This is good news. Investors, REITs, and private funds think so as well. Metro Vancouver saw a record number of retail shopping center transactions in 2010. This accounted for 3.5 million square feet and approximately $700 million in value. In 2011, the story is a little different. We've seen only $130 million in trade, but there continues to be strong demand for good assets from investors, both locally and internationally. The big retail news is twofold. There is heightened interest from US retail brands coming to Canada to establish a greater presence. And what's the reason? It's because our consumer spending on a dollar per square foot basis is much higher than retail centers all across the United States in most areas. The second piece of good news is that retail construction is alive and well. There's 5 million square feet of new retail planned for the next 3 years. Abbotsford, Port Coquitlam, Richmond, and South Delta. Looking at the office market, 2011 volume traded for office is up 45%, from 250 million to 400 million. The most significant news is the recent announcements of our new office towers in the downtown core. These 4 significant office projects, slated for occupancy in 2015, total over 1.5 million square feet. This is a landslide of activity for our city. It was only a few years ago that no one was building any office in downtown Vancouver during that condo craze. The reason this is so significant is it's for reasons like enhancing more sustainable living, alleviating pressures on transportation, and moving economic growth forward. In putting the residential and commercial real estate sectors in perspective, the Lower Mainland remains a very desirable place to live and work. More and more, we're being compared to other world-class communities, and our real estate metrics and economics will continue to reflect that. Thanks for listening.